Hi, Laksha.
Yes,
Can you hear me?
hi, Guofeng. Do you want to, are you going to use two laptop?
Yes, I'm likely to use the other machine to present the slides.
Sure, no worries. Okay, we are still waiting for the others to join in. I will
No worries.
you. Okay, I will let you put your slides first.
Let me figure out how to do it. Just a minute.
Okay, if you need the link, I can put the link in the chat.
Yeah, I think I have the link. I'm just trying to
Sure.
present it. No worries.
Okay.
Yeah, that's correct.
Okay. Sure. Would you like to? Okay. I think when you move up and down, then you will be able to see the full screen. Yeah,
I should be able to. I try to at least show the questions.
sure.
Yeah,
Can
it should work based on experience.
sure. Can will do. Okay, we are still waiting for if okay, we are still waiting for students to join in. Okay,
Yeah, no worries. I think I dialed in 2 minutes earlier.
sure.
Right. Good evening, everyone. Welcome to today's revision session. I know for all of you, this is your first session, so maybe I'll do a quick introduction of myself. My name is GF, and I have been in the tax industry for coming to 20 years now, and probably been teaching for 10 plus years. I actually lose track of it. So, my specialty is in taxation, both Singapore and APAC taxation. And during the course of my work, I do dealt with some other areas. So you could say that I have some experience in international taxation. So hopefully, I'm able to assist you in your upcoming examination. Now, given that this is your first session and that the intent of how we are going to run tonight's session will be more of going through the sample questions of the various big components of the foundation tax module, basically individual tax, corporate tax, and GST. So I think we'll see how far we can go today before deciding where would we continue on the second session. And hopefully we are able to cover most grounds. But nonetheless, I encourage all of you to ask any questions that you have during the sessions that I'm going through the questions so they can clarify with me directly. And before I start, since this is the first time I'm actually speaking to all of you, I would like to open to the floor that to see who has any specific area that you would like me to cover. Anyone currently has any specific area that you definitely want to hear about it in today's session? You can feel free to drop in the chat or come off mute to let me know. Otherwise, what I'll do is I will go through the questions, and along the way, should you have any related queries or you would like to understand certain topic better, feel free to stop me. Okay? Now, without further delay, let's go into the questions. So I believe that all of you can see my screen and would have access to these tricks. But if you feel that the font size is too small, feel free to let me know. So the first topic we're going to cover is on individual tax. And specifically, individual tax is broad enough to include any tax administration with respect to individual tax. As you all would have been briefed by now, this upcoming examination is a slightly different format than the earlier ones. It will be in an MCQ format with 4 options for you to choose the correct answer. Significant departure from the earlier format of having a 25 marks question covering each topic. So let's go ahead and look at the first question. So the first question for which of the following is not a role and responsibility of a tax agent? A. Assist clients in not disclosing immaterial non-deductible items in order to reduce overall tax payable. B. Assist clients in encouraging maximum voluntary tax compliance. C. Set aside time and budget for constant upgrading of own technical competency. D. Keep up to date with tax changes and developments. So the way to understand these questions is you first need to understand what is a tax agent. So all corporates and individuals are required to file their income tax return at various timelines. For individual, you're required to file by 15th of April, whereas for corporates, they have until 30th November of the year to file the income tax return for your prior year. So there are two ways the companies could do this, or even as individuals, right? Because a tax agent simply is an outsourced service provider, no different from, let's say, an accounting firm providing accounting or audit services. So the role of a tax agent here is basically the company outsourcing the tax compliance obligation to the service provider, in this case, a tax agent. Now, it is critical to note that the contract between you and the tax agent is one of a commercial nature. Okay? Under the law, the final obligation still reside with the company, meaning even if you appoint a tax agent, and for some reason your tax agent is very much not current in the filing, leading to a lapse. I mean, if you want to pursue legal action against your tax agent, that's perfectly fine within your legal, contractual, commercial rights. But you can't go to the IRS and say, oh, sorry, I didn't file because my tax agent basically screwed up, forgot the deadline, yada, yada. No, the IRS will still hold the company director to court, right, for non-compliance. So you need to be clear that the role and responsibility of a tax agent is the outsourced service provider to support the company in its discharging its tax obligations, but it cannot take over the statutory duty imposed under the law. So out of these four options, the correct answer should be A. It is not the responsibility or role of a tax agent. Assist clients in not disclosing immaterial non-deductible items in order to reduce overall tax payable. I believe that this is non-contentious, but if anybody else have queries, feel free to let me know. Right, you can actually just come off mute. I mean, I invite questions throughout the whole session. There's no need to wait for me to pause, or you can actually type your question in the chat. I will try to constantly monitor the chat and read out any questions, but there might be some delay because I might have missed it if I'm too focused on explaining the question.
Hi,
Okay.
Fatty. Where to find the questions you're going through? Sorry, I joined late, so I'm
Yeah,
not
no
sure.
worries. Let me put it into the chat for everyone. I believe that Laksha might have shared it earlier. Okay, there's a link there. Let me know if you can access it.
Okay, yes, great. Thanks, Bessie.
No problem, Charlotte. Okay, so moving on to BCD. So A is definitely not correct. I'm quite sure that logically all of you would come to the correct conclusion. But what's notable is you need to understand that BCD are considered role and responsibility of a tax agent. That's also very important. Assisting client in encouraging maximum voluntary tax compliance. Anything that encourage tax compliance is the job of tax agent. Setting aside time and budget for constant upgrading of own technical competency. Tax is an evolving topic. We don't expect that once you learn tax, it will be the same as what you learned, which is very interesting. And last but not least is the same point, keep up to date with tax changes and developments. So a tax agent have to make sure that they're up to speed because every budget, if you guys have been following the budget of each year, the government will announce changes, including tax related changes. So in order to properly advise your client and not get into issues, you actually need to make sure that you are up to date with tax changes and developments. So B, C, D are correct answers. A is incorrect. Any questions? This one is pretty straightforward, I think. All good. Okay, moving on. Question 5. So we have a situation. DEF Private Limited has a December financial year end. What's the latest date DEF Private Limited must keep its accounting records in respect of year of assessment 2025? So basically, the test here is the statute of limitation. So what happens is that the Singapore statute of limitation is 4 years from the year of assessment. So if you look at this, right, it's actually 5 years from the financial year end. Because when you say 4 years from the year of assessment, it's actually YA. But when you count FY, it's actually 5 years. So given that I have not gone through this, maybe what I'll do is, does all of you understand FY and YA? Okay, just a brief recap. When we talk about FY of financial year, it refers to the financial year end of the company. So in general, for individual, your financial year or your taxable period or year of assessment is always Jan to December 31st. Okay, individual, you cannot say, I want to start taxing my income from April 1st to March 31st. Not an option. However, if you are an incorporated company, what you can do is you can choose your financial year, and that does not necessarily have to align with calendar year. Now, while there are most companies out there in Singapore aligning themselves with calendar years, equally there are some that doesn't actually align with the calendar years. So when we say financial year 24, it means that in general, a company that has a December year end will have its financial year from 1st Jan 2024 to 31st December 2024. Okay, and as a result, FY24 income is to be included in its YA25 tax return. Okay, so when we talk about how long you must keep your accounting records, basically to address the concept of statute of limitation. So what is this statute of limitation or time bar? Effectively, statute of limitation or time bar is the time that stops the IRAS from raising additional assessment if they have passed this period. Now, this time bar or statute of limitation concept does not apply in case of fraudulent, right, or illegal criminal activity where your revenue or profits are artificially inflated or concealed. Okay, so any tax evasion, fraud is not statutory time barred and will not be. If the IRAS discover it 20 years later, they could still come after you. But what we're talking about is a normal situation. You file your tax return promptly, okay, let's say in YA 2025. Okay, the time bar, which is 4 years from year of assessment or 5 years from financial year, if the inland revenue does not raise any assessment, okay, they can no longer raise assessment against you. Okay, and why do we say that you have to keep the accounting records with respect, based on the statute of limitation? This is because you do not want a situation when the IRAS audits you and you are not able to provide the supporting that substantiate your revenue, profit, or expense. So for this question, clearly, if we're talking about DEF Private Limited, December year end, and accounting records in respect of YA 2025, which is FY 2024, the correct answer should be B, 31st December 2029, which effectively is 5 years from the financial year or 4 years from the year of assessment. It will give you the right answer. Any question for this one? No? All right, moving on. So I'll pause there for a question. For sole proprietor and partnership income, is it taxed on calendar year or accounting year end? So for sole proprietorship and partnership income, they are actually based on calendar year end. problem. Okay, moving on. So in this case, question 12, Mr. Tan received the following as part of his retrenchment package from the company during the calendar year 2024. A, or rather, first bullet point, salary in lieu of notice 7,000, compensation for the loss of office 18,000, payment for restrictive covenant of 10,000. How much of the above will be taxable in Mr. Tan's personal income tax return for the year of assessment 2025? So there are several combinations. I believe it requires you to assess the taxability of these three components. So I would like to pause here for 1 minute for those of you who have seen this for the first time and tell me why you think which option is the correct answer and why. I mean, most of you can guess that A is the correct answer, but it's equally important to understand why the other two should not be included in your tax return. In short, it's not taxable. Hello, did somebody say something? Nope. Okay, so clearly out of these three components, right, it's assessed that only 7,000 is taxable, 18,000 and 10,000 is not. Okay, so the question is why? First of all, 7,000 is salary in lieu of notice. For those of you who are already in the workforce, you understand that sometimes your employment contract has a 1 month, 2 month, or 3 month notice period, depending on which firm you work for. And usually, if you break or do not provide adequate notice period, you actually are required to compensate the company. Or equally, if the company decide to terminate you immediately without allowing you to serve your notice, what will happen is that the company will then need to compensate you for the loss of salary. Otherwise, you will be able to bring the company to court. So on this basis, what we have here is the first 7,000 is clearly for the salary in lieu of notice because he was retrenched, and what's likely happened is he wasn't given any notice. He might be just called into a room in the morning or even receive an email overnight that says that his service is no longer required. So any salary in lieu of notice is part of your employment income, taxable. Now, compensation for the loss of office is another word for severance payment. So typically in a severance situation, company will provide a severance package, out of which there is a compensation for loss of office. So the correct answer is such payment is deemed not taxable. And the reason is that, remember the fundamental of Singapore income tax. Singapore does not tax capital gains, it only taxes revenue gains. So on this basis, when we look at the loss of office, clearly it's not revenue in nature, neither is it paid to Mr. Tan as a result of his employment. In fact, it is paid to him as a result of him losing his employment. So therefore, it is a capital nature to Mr. Tan and therefore not taxable. Okay, next, payment for restrictive covenant. So for those of you who do not understand what's restrictive covenant, it's some kind you can see as a gardening leave. I'm not sure if you've heard of this term gardening leave. Sometimes when senior employees or key personnel leave the office, the company will implement what we call gardening leave to ensure that the individual does not actually join the rival or join any competitor. Now, usually in order to enforce that, they will have to make a payment, right? And the market, I would say, it wasn't market rate, but market practice is that if you are putting in a gardening leave or restrictive covenant for 3 months, they usually get 3 months worth of salary with the condition that during the 3 months, A is not allowed to join, let's say, a competitor in the industry, or A is not allowed to undertake any employment. Otherwise, the company would claw back the amount. So from a restrictive covenant perspective, again, it is not income of a revenue nature. And therefore, as long as it's not income of a revenue nature, not income arising from the employment, it's not taxable. Any questions here? So here you can start to see how the questions will be formulated. Very likely the different part, right, will require you to understand the taxability of several components and put together an answer. Well, this is not the most complicated. You're likely to see more complicated questions coming up. Okay. Moving on. Which of the following is not one of the factors in the badges of trade in determining whether an income is trade in nature? A. Length of ownership. B. Quantum of profit. C. Frequency of transactions. D. Mode of financing. I think this is quite clear, right? Okay. Just as a brief recap for everyone, Singapore does not define what's capital or revenue in its Income Tax Act. Okay, you can look through the Income Tax Act from the first page to the last page. You will not find the definition of capital versus revenue. Therefore, what we rely on to determine something, whether it's capital or revenue in nature, is based on a concept that is derived through ancient English courts, known as the 6 badges of trade. Okay, it's factual, and these 6 badges of trade are the 6 badges. You cannot swap in and out of it. Okay, so for those of you who have actually studied, you will know that quantum of profit is not in the 6 badges of trade. Okay, because whether or not the profit is big or small doesn't influence or doesn't provide any indicator to whether the nature of the profit is capital or revenue in nature. If you look at all the 6 badges of trade, the intent of the 6 badges of trade is to guide the court to a finding on whether the gain in the hands of the individual or company is capital or revenue in nature, which will then determine the taxability. Okay? Any questions? Nope. Okay, good. Moving on. So, which of the following statement is true? A. A foreigner who has worked in Singapore for 182 days in Singapore in the calendar year 2024 will be regarded as a tax resident for the year of assessment 2025. B. Singapore branch of a foreign company is generally considered a tax resident of Singapore on the basis that the branch operates in Singapore. C. A foreign-owned investment holding company incorporated in Singapore is generally considered as a tax resident of Singapore on the basis that it has virtual business meetings conducted from Singapore. D. A foreigner who has worked in Singapore for 3 consecutive years shall be regarded as a tax resident for all the 3 related years of assessment. Again, take 1 minute. The focus is not on why, if D is the correct answer. The focus is to try and establish why A, B, and C is incorrect. Take 1 minute to think through. All right. So let's go through. Before I proceed, anybody has any questions? No?
Fessy, sorry to interrupt.
Hi.
For A, I understand because it didn't met the 183 days that rule, that's why it didn't qualify as a correct answer. But then for B and C, can you explain further?
No problem. Okay, I think A is pretty straightforward. Now, B and C involves two very different questions. B, we talk about a Singapore branch of a foreign company. Okay, in order to understand why B is incorrect, you need to understand how do we determine tax residency of a corporation. So, a company's tax residency is not determined by way of incorporation in Singapore. Okay, there's a lot of misconception that people think in Singapore incorporated company must be a Singapore tax resident. Okay, the answer is no. It's not a one-to-one equation. If you look at the Tax Act, the requirement to determine a Singapore tax resident is whether the place of effective management and control of the company is in Singapore. Okay, now it's a big word, place of effective management and control. How do we determine it? Okay, so based on the IRAS guidance, we understand that the place of effective management and control is generally determined by where the board of directors meeting is held, because that will be the forum for the strategic decisions of the company to be made. Okay, so in general, if a company's board of director meeting is held in Singapore, it is likely to be able to prove that it's a Singapore tax resident by satisfying that he in Singapore is the place of your management and control. Okay. Now, once we understand that, then we will know why B is wrong. B talks about a branch. Okay. When we look at corporate vehicle, a company is a separate legal entity from its shareholders. However, a branch is not a separate legal entity of its head office. A branch is seen as an extension. Therefore, Singapore branch of a foreign company is regarded as an extension of the foreign company. And unless the foreign company's place of effective management and control is in Singapore, it is not considered a tax resident. Okay, and because a branch is extension, it will follow the tax resident of its head office. Therefore, a foreign company that's not a tax resident of Singapore cannot have a branch that is tax resident in Singapore. Is B clear?
Yes, Fessy, thank you.
Okay, now C, a foreign investment holding company incorporated in Singapore. Okay, there is actually quite a irony in this statement, but I will interpret it as there's a foreign-owned investment holding company incorporated another company in Singapore, or this investment holding company is incorporated in Singapore but owned by foreign shareholders, is generally considered a tax resident on the basis that it has virtual business meetings conducted from Singapore. So again, this statement, the mistake is in the virtual business meetings. So if you look at the IRAS guidelines, the IRAS did actually envision a situation when the board of directors meeting could be held virtually. And if it is held virtually, as long as chairman or more than 50% of the directors are physically in Singapore when the meetings are held, the virtual meeting can also be considered to be held in Singapore. I think this introduction of a new virtual meeting rule is critical, because if you recall, during the COVID days, there's no way that the board meetings could convene physically, right? With all the social distancing and the restriction, and we don't even allow people to fly in sometimes. Why would a foreign director want to fly in to be quarantined for 14 days or 30 days just to attend a board meeting? So therefore, they open up to recognize virtual board meetings. But the statement here says virtual business meetings. So business meetings, physical or virtual, does not support your tax residency, because it doesn't prove that Singapore is where the place of effective management and control is operated out of. So that's why C is incorrect. Questions? Good. Okay, so just now I mentioned, I think all of you understand A is just a day short, but still that is incorrect. D is the correct answer. Okay. Hey, moving on. So for 16 to 22 is a series of questions addressing using a single set of facts. Okay. So this is a little bit different from what we have discussed so far. One question, one simple fact and answer. Okay, this is a modification of what the students in all the previous examinations have to deal with. It's a very long essay of facts, and thereafter, you're supposed to address the question, which likely is a question that asks you to compute certain individuals' income tax computation, income tax payable, assessable income, etc. Okay, so here they're probably going to modify it. And while the modification of the questions is real, what you have to get used to is how to analyze and digest a question with a long fact. And if you think this is long, let me warn you first, the corporate tax have longer questions. Okay, let's look at this. Case study 3. Jane is 45 years old and is a Singapore citizen. During the year 2024, Jane was employed as a business development manager at JKL Private Limited, a Singapore-based company. Jane received the following income from JKL Private Limited and incurred the following expenses and outlay. Monthly salary of 12,000. JKL provided her with a company-owned accommodation for the whole year of 2024. The accommodation was fully furnished and has an annual value of 120,000. JKL Private Limited provided her with a rental car as plated for her personal and business use. The total cost of the rental car was 70,000 and fully paid by JKL Private Limited. Jane incurred the following expense in 2024 that were not reimbursed by JKL Private Limited. Operating expense of 7,000 for the use of rental car for business travels. Cost fee of 4,000 for the purpose of gaining an approved academic qualification. Bookshelf costing 2,500 to place in the company-owned accommodation. Still got more. Other information. She is married to Jack, a Singapore citizen who is 50 years old. Jack is currently unemployed. He has received 10,000 of dividends from his investment in Singapore stock market. Jack has completed his national service obligation. Jack did not hold any key command staff appointments during his national service. The couple has one daughter, Linda, who is a Singapore citizen. Linda is 20 years old and is currently studying at a university in the United States of America. During the year 2024, Linda received 100,000 of school tuition fees from a Singapore government agency scholarship and 7,000 of allowance from a 2-month internship with a bonds trading company in the United States of America. Jane's mother, 75 years old, is living on her own 4 blocks away from the company-owned accommodation. Jane's mother received a monthly allowance of 1,000 from Jane during the year 2024. Jane's mother is not handicapped. Jane also hires a foreign domestic helper to look after her mother, and this costs her 800 per month, including the $60 for the foreign domestic worker levy. Jack's parents, both 80 years old, are living in Malaysia. The total annual income is 6,500, which was derived from the bank interest and dividends from the Malaysia stock market. Jane provides a monthly allowance of 500 to them by remitting the sum to their joint bank account in Malaysia. Okay, so this is a mouthful, a lot of information to digest. So the trick here is that you need to, when you read through this, you need to trigger. What should I be worried about? So for example, why do we want to talk about Jane's marriage and her spouse? No, it's not because we're interested in her private life. It's because there are reliefs associated with being married, spousal relief, NS man wife relief. Okay. Now, in this example or sample questions, you're talking about Jane. Flip could be true. I could take a narrative about Jack, Singapore citizen, served national service, held key command staff appointments during national service. All these facts should trigger you to think about what? Whether or not any of the reliefs that's available can be applied. Okay. The second one is clearly about child. So because Jane is actually a working mother, so it's always about child relief and working mother child relief. Okay. Then we talk about Jane's mother and Jack's parents. So this is definitely your grandparent caregiver relief. And why is it not handicapped? You need to mention that because whether or not they are handicapped may affect the amount of relief claimable. So we look at the first question. What's Jane's gross employment income for YA 2025? Sorry, is it moving up properly? Okay, good. Just a sec. Yep. No, I think we are covering that. Okay. Yep. So the question asks only about gross employment income, and there are three options. So the first thing you need to note is what are the taxable income for Jane? So the general rule of thumb is any benefits, okay, including salary or benefits in kind received as a result of your employment is considered your employment income and is taxable. So we start off with the basic, right? I think 144,000 comes from salary, okay? 12,000 times 12 months. I don't think there's any dispute to this. This portion is relatively simple. Now, accommodation is the interesting one. So accommodation value 120,000, and because it's fully furnished, we take 50% of the accommodation's annual value, and that's 120,000 times 50%. So at this point, any question? Okay, what I'm gonna do is yep.
Sorry. What about the Esprit car?
Sorry,
The Esprit car one?
the expat.
The Esprit car.
Oh, car expense.
Yeah.
Okay, so remember, we're not talking about expenses here. We're talking about income of Jane. So you're right.
It's also
It's
allowance,
not
right?
finished. So it's not finished.
Okay.
We need to consider rental car benefit.
Okay.
So for the S-Plate rental car provided by the company, again, is 70,000 times 3/7, which give you 30,000. So when you combine everything together, you will get 354,000. Okay? Is there anything clear? Okay, now, I'm not sure if anybody has started revising, but I'm going to paste here. Okay, because a lot of candidates will ask me, so what should I memorize? Okay, my response is always, first of all, get familiar with the type of relief and the income that's taxable first. I think income-wise, generally, it's all taxable. Okay, but you need to also look at how. So what I have just put in the chat is basically the IRAS page to relief, right? So if you navigate around the site, you can also see the basis of individual income tax, and then how do you calculate your benefit? How do you calculate your relief? Okay. So you can see that it's all provided there. So that will be a good starting point for you to understand individual tax relief. Okay. Questions?
Fassy, so for the exam, right, will they give us like the relief, like the percentage, like so we don't have to memorize? Is it in the appendix or something?
Yeah, this is a very good one. If I refer to the past years, they don't have all the relief. They do have some of them. But this year, I mean, depending on whether Laksha is still online, I do not know what would they be providing, There's something that I can check in with Laksha to see if she has insights or a sample and ask them to share it with you in the next session. But usually they would provide an appendix. But I'm just not sure whether the appendix has been released.
Okay, can I answer this question? Okay,
Hey,
the
Laksha, go ahead.
appendix will be similar to the open-ended question. So you can look at the December 2025. So what the appendix is provided there, it will be quite similar to your exam. Okay, Charlotte, did I answer your question?
Yeah, yes, thank you.
Okay, welcome.
Yep. So the idea here is if this is the same appendix as provided, memorize those that's not on the appendix. For those that's on the appendix, you could just tick off because you can just refer to it. There's no need to waste additional brain cells to memorize everything. Okay? Okay, so that's the first question addressed. Now, second, what's the total amount of employment expense Jane can deduct from her gross employment income for the year of assessment 2025? So you need to read this very carefully. The question is only asking about total employment expense. So do not go and look at any other thing, okay? And it says deduct against employment expense. If there's some expense that has to be claimed separately, you should also call it out, okay? So there are four answers: 7,000, 11,000, 13,500, and none of the above. So the correct answer is none of the above, okay? Why? Very simple. There are only three expenses called out in the question that says associated with employment income. So let's look at the three again. Okay. So you have 7,000 for use of rental car, 4,000 for gaining approved academic qualification, bookshelf costing 2,500. Okay. Why is it all a non-deductible? Okay. I think the explanation is here. Car operating expense on S-plated car, I believe that everybody is clear, prohibited under section 15 of the Income Tax Act. Now, course fee is interesting. So a lot of candidates ask me this question. Isn't there course fee relief? The answer is yes. But my question says, what is the deduction you're claiming in the form of employment expenses? So you can't claim course fee as employment expenses. You claim it separately under the course fee relief, assuming the conditions are met. You need to separate them. Okay, last but not least, bookshelf cost. Again, you wouldn't even pass section 15 because bookshelf is capital in nature. So if you are not taxing capital income, capital expenses are not allowed a deduction. So the answer to this question is none of the above. Any questions or clarification needed? Nope. Okay, let's move on. Okay, let me make it smaller. This is slightly bigger. Okay, 18. What personal reliefs will Jane be able to avail in respect of her husband Jack for the year of assessment 2025? So, first of all, you actually will consider two of the relief. And the answer is clear, right? If you look at the link I've shared, in respect of your spouse, you're likely to be able to claim your spouse relief or your NS man wife relief because her husband is an NS man. Okay? So putting quantum aside, the question is what's the condition for spouse relief to be claimable? For spouse relief to be claimable, your spouse must not have an annual income exceeding 8,000. The question says Jack received 10,000 dividend income. Okay. The thing to note here is it doesn't matter what kind of income Jack received. It could be from dividend, it could be from putting money in the bank. As long as his income exceeds 8,000, you cannot claim your spousal relief. Okay. So Jack clearly failed the income criteria, and therefore Jane cannot claim spousal relief, leaving her with NS man wife relief. And there's two value: NS man wife relief at 750, NS man wife relief at 1,500. The correct answer is at 750 because What did the question say? Jack is not a key appointment holder. Okay, if he's a key appointment holder during the national service, you will have a different relief value. Okay, questions? Nope. Okay, all good. Next one. What personal relief will Jane be able to claim or avail in respect of her daughter Linda for the year of assessment 2025? Okay. Linda is a daughter. Jane is a working mother. There's only possible maximum of two relief. One is your child relief, or you call qualifying child relief, and the other one is your working mother child relief. Okay. The idea is the working mother child relief is given on top of your qualifying child relief and is only available to working moms. Okay. So working dads are actually not entitled. Okay. So the question here is, which is the correct relief? Okay. First of all, take 1 minute to digest this. Okay. And tell me which is the correct and why B is the correct answer. You need to rule out A, C, and D, in fact. Okay. So I guess all of you can establish that one, your qualifying child relief and your working mother child relief is actually very closely connected. Meaning, if you want to know whether you are entitled to working mother child relief, you must first assess your qualifying child relief. If you cannot even claim qualifying child relief on the child, there's no need to think further about your working mother child relief. So we replicate the facts here. Now, let me make it bigger. Linda is 20 years old, studying full-time at a university. She's a Singapore citizen. Okay, she qualifies for child relief, that's 4,000. Okay, and working mother child relief also qualifies, and that's 15%. So why is it not 8,000? Okay, because if you look at the rules, 8,000 is for child born on and after 1st Jan 2024, if I'm not wrong. So Linda is already 20 years old. She's definitely born before that, and that still goes under the 15% category. The second most common question I get is, but didn't Linda exceed the income threshold? Okay. Can anybody tell me why? Did Linda actually exceed the income threshold? Let's look at the question with Linda's situation.
Linda is a student.
Correct. But
Yeah,
she has an income as a student. And in fact, a very generous income. 100,000 of scholarship and 7,000 from a 2-month internship with a bonds trading company in the US.
Yeah.
So the question is, for child relief, does it matter if the child has an income?
Child, no income, no, that is a sponsor. She never earned.
Okay.
So
Even
she's
if
eligible.
So you're saying that there is no income because you're not treating the tuition fee, you're not treating the scholarship
Yeah.
as an income.
Yeah.
Okay. That is the correct position. Okay. But what about the internship allowance?
Oh. Internship allowance also Yeah, it's
Yeah,
also
internship
income.
allowance is more like salary, right?
Yeah,
So
like salary.
yeah, that would be an income.
Mm.
But the good thing is, it didn't exceed the threshold. The
Mm.
threshold for the relevant year of assessment is 8,000. So you're absolutely correct. We have two situations. One, because the scholarship she received is not an allowance. Okay, it's given in the form of tuition fees, meaning they give her the money to pay the school fees. So in this way, it's not considered income. We will drop it when we consider whether it's an income to Linda. But her 7,000 allowance is. In fact, if she earns another $1,001 more, her mom cannot claim both qualifying child relief and child relief on her. Okay? So please take note of the income requirement. Okay?
So actually cap is 8,000, right?
Yes, you can claim because the threshold is 8,000, but Linda's allowance was 7,000.
Yeah.
Therefore, below threshold, you can
So
still
can
claim the same.
Correct.
Can claim. Yes. Okay.
Okay.
Any other questions?
No.
Nope. Okay. Anybody else? If not, let me move on. Next question. What personal relief will Jane be able to claim or avail in respect of her mother for the year of assessment 2025? Okay. So you have your parent relief of 5,500, parent relief of 9,000, of course. C, parent relief plus foreign domestic worker relief, and D, none of the above. So the difference between the first and second is depending on whether your parent lives with you. Clearly, the fact pattern says the parent lives away from her, right? It's 4 blocks away. So clearly don't live together. You will take the lower amount of 5,500. I think this is clear. Any questions? Nope. This is an interesting one. What personal relief will Jane be able to avail in respect of Jack's parents for the year of assessment 2025? Parent relief of 5,500, parent relief of 9,000, parent relief of 11,000, none of the above. Why?
Jack parents any annual income, so right.
It's not only the annual income issue. There's a big problem with the facts. Let's look at the facts again. I wouldn't say
Not
big
living
problem.
with the taxpayer.
Nope. Remember, Jane's mother is also not living with the taxpayer,
Yeah.
right? But what's the difference between Jane's mother and Jack's parents?
Jack's parents.
Yep. Somebody give me the right answer on chat. You're right. So the requirement for parental relief to apply is your parents must be living in Singapore. Okay. So there's two tier. If they're living with you, you get a higher relief. If they're not, you get a lower relief. But they must be staying in Singapore. So if you look at the fact pattern, yes, if you look at the fact pattern, Jack's parents are not in Singapore, they're in Malaysia. But Jin's mother is 4 blocks away in Singapore. So therefore, Jin's mother qualify, but not Jack's parents. Okay? Okay. Last one. So apart from the personal reliefs mentioned in questions 18 to 21, based on the limited information available in the case study, what other personal relief will Jin be able to avail to? Okay. So I think for this question, the answer is pretty clear. The thing must come out is you must have claimed cost fee relief because Jane has definitely incurred, right, a fee on the cost. And therefore, that's something that she cannot claim as a deduction, but she can look at cost fee relief. So in addition to that, Jane is a Singaporean. So all Singaporean will have what? CPF contribution. So CPF contribution relief is also something that you need to immediately think about. Last but not least, Jane undertakes an employment, and all individual that earns employment income is allowed to claim earned income relief. Okay, so the answer is D. Any questions? Okay,
August.
moving on. Interesting. Which of the following statements is true? A. Interest paid by a Singapore resident company to the Singapore branch of a non-resident bank will be subjected to Singapore withholding tax. B. Service fee paid by a Singapore resident company to a non-resident training service provider for conducting virtual training session from the non-resident country will be subjected to Singapore withholding tax. C. Rental fee paid by a Singapore resident company to a non-resident service apartment company for providing accommodation to the Singapore company's employees during a business trip will be subjected to Singapore withholding tax. D. Royalty fees paid by a Singapore resident company to a non-resident company for the use of trademarks will generally be subjected to Singapore withholding tax. Okay, these are 4 very long statements, and you are asked to assess which is true. Again, given that we have highlighted D, 99%, if not 100% of you should know that D is true. Now, take 1 minute. I want to hear explanation why A to C is false. That's actually the challenge. Okay, ABC,
Yeah.
want to try? Why is
They
A
all-
false?
Yes, answer is D, but A also looking correct answer.
You think A is also look like
A
correct answer?
also true, right? With the whole text.
Okay, so to address ABC, I'm going to give you like a 5-minute run through of withholding tax. Okay?
Yeah.
So for withholding tax to be triggered, it must be paid by a Singapore tax resident to a non-resident. Okay? However, not all payments attract withholding tax. So the section that governs withholding tax under the Singapore Income Tax Act is section 12.7. Okay, 12.6, section 12.7. These two are the critical sections. Section 12.6 governs interest. Section 12.7 governs royalties, technical fees, management fees, rental, etc. Okay, so broadly speaking, the first one says interest paid by a Singapore resident company to a Singapore branch of a non-resident bank will be subjected to withholding tax. Now, this is in theory true. In theory, because Singapore branch of a foreign bank is considered a non-Singapore tax resident. However, the IRAS has actually instilled a law, and in the earlier years, it's called administrative concession, but now I believe it has been legislated. Is Singapore branches of the foreign companies, while they are not treated as Singapore tax resident for tax purposes, any payment to these branches is not subject to withholding tax. Okay, so it is like a concession to them. They are not Singapore tax resident, but when people making interest payment to them, you don't need to pay withholding tax. But these branches cannot be treated as Singapore tax resident. They do not have benefits under the Singapore Tax Treaty, for example. So statement A is false because it didn't consider this special provision that allows payment to Singapore branches to be exempt from withholding tax. Okay, that's why A is false. Now, B, again, service fee paid by a Singapore resident to a non-resident training service provider. Yes, I can broadly see how this can come under section 12.7C, management consultancy fee. But the problem is they made it clear that it's virtual training conducted from outside of Singapore. So when we talk about 12.7, 1, 2, and 3, okay, there is actually an exemption for services rendered entirely outside of Singapore, it is exempted under Section 12(7) capital A. So when you pay service fee in this situation, you will not need to account for withholding tax. Therefore, B is false. Okay. C, similarly, when you pay a non-resident for rental fee, for it to be subject to withholding, it must be with respect to an accommodation or immovable property in Singapore. Okay, in this case, I do believe that this rental fee is with respect of an immovable property outside of Singapore, so it's quite clear it doesn't apply. Therefore, A, B, and C are out, leaving D as the only correct answer. Okay, this is on withholding. Any questions you guys want to clarify with me on withholding tax? This is a particularly confusing area for most.
No question.
Nope. Okay.
Yeah.
Let's do one more question before we stop for a break. Okay, Mr. Piper, a non-resident individual in Singapore, has just received the tax computation from his tax agent in respect of his employment income in Singapore for the year of assessment 2025. Based on the computation, he noted the following. Net employment income equals to 250,000. Personal relief, if applicable, is 50,000. Applying the Section 40B relief, what will be the tax liability of Mr. Piper in respect of his employment income in Singapore for the year of assessment 2025? Okay. So just now we talked about tax resident. Okay. And a lot of people ask, why is it critical to be considered a tax resident? This is because if you look at the key difference between an individual tax resident and an individual tax non-resident is your tax rate that applies to employment income. So for all of you here who I presume are Singapore tax residents, you will get your bill from the IRS, or you have gotten it for last year already by now, and you will realize that you are actually paying a tiered rate. Okay? If you are considered a non-resident, they actually need you to test between the higher of the progressive rate under the resident of 15% of the gross employment income. Now, why is it important to talk about this gross employment? Why must it be either or? Okay, because it depends on how much the non-resident can earn. If you think about it, the Singapore income tax rate, if I'm not wrong, the highest tier today is probably at 24%. If I'm not mistaken, I might be wrong. It was 22% a while ago. So theoretically, there could be a non-resident who is earning $1 million salary in Singapore because he's a very senior role like CEO, that if you apply 15% on his gross income, is actually lower than the resident progressive rate. So the resident progressive rate would be generally applicable or lower as compared to the 15%, in most cases up to a certain band. And that's where everything above, you'll be higher. So in order to safeguard the benefit, and when IRS want to see as given a benefit to tax resident, they put in the test. So under Section 40B relief, right, if you are a non-resident employment, you'll be taxed at the higher of, not lower of, resident progressive rate of 15% of gross income. So after when they calculate, okay, given that 15% of 250,000 is 37,500, clearly this will be higher than your resident progressive rate. So the answer is D. Any question? And don't worry, the resident progressive rate, based on my recollection of the past appendices, it is provided. So do not go and memorize them. It's a very painful long list table. Okay?
Okay.
Any questions?
No.
Great. If not, we are at the 1 hour mark. We'll stop for a 15 minutes break, and we'll continue with the rest of the question thereafter. Please be back by 8:49. Thank you very much. I'll make it 8:50. Thank you.